Adobe Stock, ticker symbol ADBE. Is this the best growth stock to buy right now? Adobe Stock is down 51% year to date, which is insane. The 52-week high for Adobe is at almost $700, so that's a big drop to the current stock price of $275. But does this mean that at current valuations Adobe Stock is a buy? In this video I'm going to show you real quickly what Adobe does, the historical returns, the fundamental analysis, some competitors, and in the last part I'm giving you my price target to see if they are a buy or not. And I think you definitely want to see that part, so make sure to watch until the end. And I'm also very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does Adobe do? Adobe provides content creation, document management, and digital marketing and advertising software and services to creative professionals and marketeers. One of the most iconic tools is Photoshop, of course. If we dive in the latest quarterly results, we see that Adobe achieved a record revenue of $4.43 billion in the third quarter, which represents a 13% growth year over year. Diluted EPS was 2.42 on a GAAP basis. Operating income was at $1.48 billion and net income at $1.14 billion, which gives us a profit margin of 25.7%. Adobe also acquires Figma, which has an addressable market of $16.5 billion by 2025 and expect to add $200 million of ARR in 2022. Figma has a gross margin of 90% and has a positive operating cash flow. If we continue to check the fourth quarter targets, we see that Adobe aims to have $4.52 billion in revenue and a 10% growth year over year for digital media segment and 13% for both digital experience and experience subscription. EPS is expected to be around 2.44 GAAP. If we check the revenue breakdown, we see that subscription is by far the biggest segment, representing 93% of the total revenue, where product represents 3% and services 4%. But what I found interesting is the fact that net income is decreasing year over year, so this is something to keep your eye on. And now that we know more about Adobe, it's time to check the historical returns to see what happened there. I decided to include the S&P 500 as a benchmark, since this is one of the easiest ways to invest. Just buy an S&P 500 ETF and wait. On top of that I include CRM as one of the major competitors. On the 5-year chart we see that Adobe returned 86% while the S&P 500 is at 46%. And since Adobe doesn't pay any dividends, we are looking at the return of the S&P 500 without the dividends. CRM is at 54%, so both stocks did outperform the S&P 500 on the 5-year chart. On the 1-year chart things look pretty bad for both stocks compared to the S&P 500. Adobe is at minus 55% return while the S&P 500 is at almost minus 18% return. So that's quite the difference. CRM is at minus 48% return. On the 6-month chart it's basically the same story. Adobe returned a minus 35% while the S&P 500 returned 19.5%. CRM returned minus 30%. So again, the S&P 500 had a better return. On the 1-month chart it's still the same story. Adobe returned minus 27% and the big drop is because of the released earnings. The S&P 500 is at minus 10% while CRM is at minus 11%. So on the 5-year chart both stocks outperformed the S&P 500, but in the past couple of months they underperformed the S&P 500 big time. So does this mean that at current prices Adobe stock is a buy? Let's check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe and in return you receive similar analysis to this one every week. Let's continue by diving into the fundamentals. Adobe is a $129 billion market cap company with a PE ratio of 26.5, which could mean it's still overvalued after a 50% drop in stock price. But of course, there are more fundamentals that will tell us if Adobe stock is undervalued or overvalued. Later in this video I will give you my 3 price targets to see at what prices I'm going to buy Adobe stock. Next up is revenue. Adobe has a trailing 12-month revenue of $16.69 billion, and in this graph we see that revenue went up really nice and steady. This is exactly what you want to see. And to be honest, after increasing the revenue for a couple of years, they are still capable of growing in double digits, so this is something that I really like. Net income is at $4.89 billion, which gives us a profit margin of 29.3%. But keep in mind that in the latest earnings we saw that profit margin was at 25.7%, which is a big drop. So this is something to keep your eye on. Margins are decreasing. Return on assets is at 18.9%, which is above my 10% minimum. So this looks all good to me, and it's the same story for the return on equity. And now the most important number, the ROIC, or return on invested capital. It's at 35.2%, and to be honest, this is pretty insane. They really know how to invest their money, so I do like this a lot. On top of that, it's significantly higher than the 5-year average. Another thing that I really like about Adobe is the cash to debt ratio. Right now, total debt is at 4.6 billion, and you want a big company like Adobe to be able to pay down a big chunk of the total debt. Cash is at 5.7 billion, so they are capable of paying down all their debt and still have some money left. So this looks really good to me. And it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to do acquisitions, research and development, buying back shares and paying dividends, which Adobe doesn't do right now. In this graph we see that free cash flow went up really nice and steady, so this looks really good to me. Another thing that I really like about Adobe is the fact that they buy back a small amount of the shares outstanding. In the past 5 years they bought back roughly 4% of the shares outstanding. And I wouldn't like to see a higher number here, since the stock was overvalued in my opinion. And buying back an overvalued share isn't the most efficient way to spend your money. But in the end, buying back a small amount is very good I think. This will increase your ownership and EPS, which will lower the PE ratio in the end. So overall I'm pretty satisfied with this number. Next up are the fundamentals of Adobe versus Salesforce, one of the competitors of Adobe. Both companies are quite big in terms of market cap. Adobe has a PE ratio non-GAAP of 20, while CRM is at 30. So to me, Adobe is the winner here. Adobe has a 13% revenue growth year over year, while CRM is at 24.5%. The 5-year revenue compound annual growth rate is also the highest at CRM, but the net income compound annual growth rate is way higher at Adobe, with 20% versus minus 70% for CRM. Free cash flow growth is the highest at CRM. Adobe has the highest gross margin and the highest net income and free cash flow margin. Return on equity and return on total capital are also the highest at Adobe, so to me they are the winner here. Both companies can pay down a big chunk of the total debt, but Adobe can pay down all their debt. Overall, I think both companies have a lot of growth, and Adobe seems a bit more fairly valued. But does this mean to buy Adobe stock right now? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. I expect things to slow down a little bit, since it will be harder to grow in high amounts when you become a bigger company. So I'm filling in 8% for the low assumption, 10% for the mid assumption and 12% for the high assumption. For the profit margin, we saw that margins are decreasing from 29% to 25%. So I'm filling in 23% for the low assumption, 25% for the mid assumption, and 27% for the high assumption. For the free cash flow margin, I'm filling in 35, 37.5 and 40%. PE ratio is at 26 right now, but I don't want to overpay for this company, so I'm filling in 20. And it's the same story for the price to free cash flow. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Adobe is at $275 a share. I hit analyze and we see some mixed results here. We have a low price target of $173 to $263, which is quite a big range. A mid price target of $219 to $328, and we have a high price target of $275 to $407. So if you believe these high numbers, then Adobe stock is a buy. To me, the mid price target is the most justified here, so that would mean a range of $290 to $328. So the $275 right now seems to be in the middle of that range. And with the current market conditions, I think the best thing to do is wait for the stock to come down even more. My final conclusion on this stock is that I really like the business. The tools they create are one of the best tools out there, and they are definitely the market leader in this industry. With acquiring other companies, I think they will add a lot of new customers and revenue, which is great. With a price target of $219 to $328, I think I will wait for the stock price to come down a little bit further before buying this stock. I want to build in a higher margin of safety, so whenever it drops to $240 or lower, I think I will check them again. For now, I'm adding them to my watchlist because I really like this company. But remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.